All right, guys, welcome on. We won't take too long. Welcome on, guys. Welcome, guys. Let me just give it like 1 minute and then I'm gonna start. But yeah, let's go. All right. Well, let's go. I'm just trying to make sure the feed is working all right. That's why I always give an extra minute as well, because I don't know if this thing is gonna be a little bit funny. So let me just make sure that this is working properly. All right. Okay, well, without wasting any time, let's go through it then. So like we were discussing yesterday, let me go back to the dollar index and let's have a look at what the price action is there. So let me put this here. Now, with the structure of what price is doing at the moment, this key supply flip zone here, we have, well, now is the 20th, so we have 12 days until August the 1st to know whether the body of the candle is going to close beneath this supply zone or not. Now, if the body of the candle has a recap, for some of you who haven't been listening now, ignore that. That's MT5 in the background. If you are, and this is a key here, if you haven't listened to the analysis yesterday, you want on the live, what we're trying to ascertain to is how strong the dollar is going to be in the next couple of weeks, which at this stage is pretty good and easy to do because we have a very key zone that we can look at as a reference point. So as a quick recap here, we waited until August the 1st before we make any moves when it comes to knowing for sure. Now, there are ways like we went through yesterday to know a bit sooner than that. But for now, this key supply flip zone, the price has come to the other side of it. And if the body of the candle closes within here this month of July, then we're still in play for August to go for potential long. Okay, now, with this being said, the reason why I'm saying to wait until August the 1st is because COVID-19 is a good example of why it's good to wait. Now, this is the March 2020 candle. When the price spiked above this area, it looked as though the price was going to break above and continue. But notice that sooner or later, the price actually closed back beneath this area. So if you're looking for a buy, this would have been a terrible buy. And the price actually went all the way back down again, even though it made lower highs here. And then gave us this, let me put this here, gave us this induction here for the long. It will still be a bad idea to chase a long. So until literally we get to August the 1st, until we get to August the 1st, please don't throw away the chart of the dollar index, basically, because the price, of course, could go short. If it does, I mean, the next major order block to the left will be back at the principal area here, or somewhere close by in some sort of supply zone that can be flipped for a demand zone. But for now, I know that there's this area here, which is probably not the best. I wouldn't want to use this because this is not a key area. This is more of the key area here because it lasted for 5 years. So this is a very strong area of supply. So this is what we're watching. Now, based on that, as I said to you, that the dollar index hasn't been given all the signs, but we can still talk about this scenario here that I was talking about. So let me quickly do this. Let me go to the weekly. Now, remember, guys, on the lower time frame here, or the weekly, this weekly order block here is a very good area that the price can get into to give us a long. We do have relative equal highs here. We have a liquidity void, and we also have the liquidity gap that I spoke about, which is at 103,600 something, around about here. There's a liquidity gap here that was left on a Thursday market open that hasn't been filled out yet. So there's going to come a time where the price will have to go back here anyway. However, what I did say, which is key to remember, is that at the moment the price has done a weekly induction and it's starting to reverse. So the dollar in essence is gaining some strength right now, but it hasn't gone into this order block to do it, which it has created inefficiency beneath these lows here. So we have unfulfilled efficiency of demand beneath here. Now, if the price continues and goes all the way long, now you remember the markings that we have. Look how accurate the equilibrium order block is. It looks random where the price got to here before dropping, but this is exactly the equilibrium price point. There's a supply order block right here, and the price dropped drastically from that point. So in terms of premium and discount pricing, this is the perfect. This is why I don't even want to change my I don't want to change my Fibonacci because it's drawn so accurately and perfectly. You can't, even on the lowest time frames here, or the lower time frames, it's so accurately perfect, which is just lovely. So what I do want to see though is how the price is going to behave. Now there's one more swing high to the left on the H4, which is here. So I want to see how the price reacts here. Now the price to this high. Now there is liquidity above this high. Of course, it won't be as much as like a daily or weekly, swing point or something. This is just another swing point on the way down. But above this high would be some sort of buy stops here and possibly some stop losses. Now, if the price gets above here, what I would like to see is if it's going to continue going long. Because if it does, the next target would be this liquidity void here, filling this one out, because there's nothing to the left here. Or the price may decide to get to this high dwindle a little bit and then have to pull back down again. That's the two options that we have. Now, it's a Thursday, and there isn't that much market news in terms of high impact news this week. I don't even think there's high impact news at all yet tomorrow. I think there was Australian dollar news last night or early this morning, but nothing major. So right now we have a good kind of frame of reference to know what we want to do. If the body of the H4 candle, now the next H4 candle doesn't form until 5 o'clock. So we could even be more specific with time. So 5 o'clock UK time, if the price closes above this H4 order block, then we could see the liquidity void filled. Or if not, then what we're looking for is if the wick closure happens here, then we probably are pulling back down here. And the market will find a way to come back down here, fill out this inefficiency and get into this order block, which will be around about 98 or just at 99. Now, if that happens, the next place I want to see the price get to is this 101 area, which is where the equilibrium order block is. Now, it's very powerful when you get an equilibrium order block because you can do a lot with it. If the price, of course, breaks above here, then the next stage would be for it to continue back low and go to our original kind of area here, which is the end of the liquidity void, and probably even take these highs too. So this is really what I'm watching for with the dollar. Now, this can happen before we get to the end of July. And if this signature happens beforehand, then there's a good chance that the price will be on its way back up again. But for now, we have to wait. Now, because we have to wait and the dollar's not really the best correlation, or major pairs are not in the best correlation, I always told you that this is the time where, as my strategy is to switch over to cross pairs or to minor pairs. So I explained. So if we look at this again, Euro USD is pushing short, gold is pushing short somewhat. Today, the correlation is a little bit better. Yesterday, it was worse. Pound USD is moving heavily short. And the differences between these ex-USD pairs is the strength of their other currencies. So the other currencies are starting to play a part in their price action. Pound USD is out of the pairs at the moment. The pound is the weakest one. The euro seems to be the strongest because it's barely moved this week. It's had a little bit of a move today, but barely anything. The Australian dollar also, similarly, nothing really much going on. We had positive Australian dollar news, which came for these highs and just done a few pips, about 30 pips short. But since this week has started, if I go to pound USD here, we've had 200 and let's just call it 260 pips. So the pound is a lot weaker, and I believe that the news of the CPI news here, which is right here, definitely added some effect to that. Now, if you remember my markets for pound USD, then you know why I've got these lines that look a bit weird here. All right. Now, if I go over to pound USD, this is the buy all the aggregate, so the aggregation of liquidity here. And if you notice where the price is right now, the prices come to the bottom of this area here and filled out that buy order aggregate. So now I'm watching with Pound USD to see what's going to happen, because Pound USD, even though it could be a great long, there's a lot of inefficiency on there that makes me think otherwise. For example, here, the price took off for a long without returning to this H1 order block, and you can see there's a clear unfulfilled efficiency here. Now, I have to put my line above the high so that you can actually see it right here. We're supposed to get a return in here, so it makes me wonder if Pound USD is going to drop all the way back in. Okay, but for now, because there's such off correlation, I don't really want to trade major pairs. They're not ready yet. All right, so let's go over to some other setups that I have. So I was looking at CAD Japanese yen. We had a very clean induction of the lows. We have a break of market structure above quite a few daily highs. And if you want to see the daily highs, I'll show you which ones they are. So there's one daily high here. We have another one here. And then we have another one here. Now, we haven't had a return to the order block as of yet, but we have had a good market structure break, which is nice. At the moment, the price has taken the high of yesterday. There's not much of a reaction here, so we can't really do anything with it yet. We'll take a look at the news to see if there's anything today that might cause the price to become a little bit more volatile. If not, then what we'll do is circle back later on. But really and truly, what I do want to see with Pound CAD is if it can pull back here to this order block, I don't mind taking the trade. Now, I'm not going to use the H1 to do it. I'll probably do the M15, because if I do the M15, I'll get a much smaller stop loss for this, because I'm not going to put 42 pip stop loss on this. Now, similar to Pound Japanese yen, even if the price doesn't reverse all the way, there's quite a few inefficiencies to the left that we can use. For Pound Japanese yen, we have this order block here. We have no return back to it here at these highs right here. And also we have a liquidity gap, which is a little bit hard to see, but right here, the market opened with a slight gap that it hasn't filled out at 108. So if it was to do this move and return to this order block here for a buy, then we have 380 pips, potentially 420. I guess even if your stop loss was the 40 pips or just about 40 pips, 40 pips for 420 is a risk to reward of about, where's the maths when you need it? About 1 to 11, 1 to 10.5. So not a bad trade at all. So if you risk 1%, you can make 10% from that move. Now, obviously, if I go to the M15 to do this, or the M15, okay, then you can use the price action here and frame a better entry. Looks like there's a liquidity gap on the M15, so we can already reduce this order block look that we're looking for over here to run about this. And yeah, look for 104, maybe put your stop loss about here, maybe in the 50% range of this order block. There's a lot of things that can be done. So I am watching, but the price is pretty flat today. Nothing's really happened, so we can't really do anything. All right, EuroCAD. Okay, just like Pound CAD, remember, guys, that we have, let's just draw this out. The price has come back to a very key supply zone for the year, which is why the reaction is so strong. With EuroCAD, though, it actually has taken the previous week's high. We had a strong bearish candle here covering out. In this H4 candle, all of these bullish H4 candles were closed beneath in one go, which shows some heavy bearishness here. Then the price has come back to use this as a flip zone here and is continuing on the short side. Now it has closed beneath this liquidity void here at this order block right here. So now I'm actually expecting EuroCAD to probably push a little bit short, further short. Now it is slow in doing it, but nonetheless, it is still pushing short. Where we'll go to is interesting. I'm most likely, and this is a term that I like to use, that right now the bears are scoring points on the bulls, which they have taken this low. There's only one more daily low left over here. And then after that, the price will be making its way down to here. So I would like to see if EuroCAD will come back down here. Maybe that might present another buy. As I said to you guys on the live, if EuroCAD was ever so nice to us and it came all the way back down to this inefficiency that was supposed to happen and never did, I'd be a happy person. But we'll see what happens anyway. All right. So equally, Pound CAD. Now, Pound CAD, is a setup that I've given to my students as well. I'll give it to you guys. Pretty interesting one. I think what I'll do, let me just get a fresh chart first so that you can see this properly. All right, so pound CAD here. Now pound CAD on the monthly time frame, there's not that much information that you can derive apart from the fact that in this candle right now, the price has taken the high of June, the high of May, very close to the high of 2022, but it didn't manage to reach that far, but still has taken all of those highs in its pursuit to go long and kind of pulled down pretty strongly. If we get down to the weekly here, to be more specific where the price went, which is going to be an obvious reason why the price will sell off like this, is that it's returned to the key or principal supply order block for the year of 2022. So just before the whilst the Ukraine-Russia situation happened that week, this is the order block that formed here of supply. And the prices come all the way back into it, and of course it's selling off. Now, it doesn't mean the price is going to sell off all the way down here, because right now, as it's sold off, it's also come back into this very strong area of demand. All right. We have this validation point here on the weekly too. And if I was to put the Fibonacci range, I still think that pound CAD has a little bit more of a long left in it. If we put this here and I go down to the daily time frame, then the price has kind of crossed beneath equilibrium and left a liquidity gap so far for the day. But it still has some more to go. I do think that the price is probably going to go for a short. Now, I had a setup yesterday, which was, I showed you guys, which was this. Let me just pull this out. We had a really nice H4 flip zone here that the price was using for quite a while. Supply that the price broke above it for demand. We had this unfulfilled efficiency here, which the market has filled. This is the reason why the wick came back down here. But it looks as though that there's still more ways to go when it comes to the Canadian dollar. So even though it filled out the inefficiency and pulled back up some, still decided to descend short. So that means now we're in territory where the price can actually push even further. Now we have a range of accumulation over here, and I'm interested to see if the price will reach down there. That would be really nice to see. And of course, which is things I saw before, but I didn't really react to because the price had already taken off. We have this equal low situation set up here on the H4. Now, with pound CAD, the liquidity within this area is so strong that it didn't actually really take much for the price to sell off. On lower time frames, for those of you wondering, okay, when the market took off here, we actually don't have any induction. The high of the previous day wasn't taken. In fact, we have equal highs here. This is the high of the previous week up here. The price didn't react to the high of the previous week either. So really, we just have a very strong pullback reaction that's going on right now, which is why I'm still expecting there to be a long, because we didn't get any inductive move. Now, I know on the monthly, the price has taken highs of previous months from the monthly perspective. And this is why the short is so strong. But still, we should have had a corresponding daily move at least where the high of the previous day was taken or something, but we had none of those such things. So as a result, now we're in a situation where there's going to be a very strong pullback soon for a long, but we're going to have to keep on working to map out and see what happens. Now, with pound CAD, it's not so difficult to do. We just need, I think, about probably another day, or let's wait for 3 o'clock and see what the price does. And it'll be pretty easy to figure out where the price is going to go to. So this is what my idea is with pound CAD. So pound CAD, CAD Japanese yen so far. USD JPY is another. I'll give you all my setups, which is the price. You can see my arrow here for the long. If you want to know why I'm looking for a long, we have a weekly validation point. I guess for ICT people, you may call this a FVG. Okay. But we have a gap here in terms of price action, and the price didn't return to weekly supply before selling off. So we have an inefficiency here, which is the form of an unfulfilled efficiency of supply. And on top of this area here on the daily time frame, we have a supply zone nested right here. So there's a reason that the price would need to come back here anyway into supply. And this is what I'm looking at now. When the price dropped here, it has taken the low of the previous month of USD JPY. Had a little bit of a struggle to go for a long, but you can see it is starting to proceed that way. We had a great kind of setup here a few days ago. I think it happened with the news. That's why it happened so quickly. The price took the low of the previous day, spiked up down here, up and then down, and then off we go. Now that the price has really broken structure here, I mean, even if I was to draw this here, you can see that the price is clearly closed above it. So we've got good market structure break across the board. Similar to CAD Japanese yen, I'm hoping that there may be a pullback somewhere that we can get into. I mean, the deepest one will be back into this order block right over here. Let me just draw this out. This area right here. The price can just give us something there. That will be fantastic. If it doesn't give us a pullback of that nature, then that's fine. But as I was saying, similar to CAD Japanese yen, there are even more intermediate targets close by that we can go for. I mean, even stuff as obvious as this, you know, we have strong liquidity void, no return to this order block. So, you know, a fast move away from the price will have to be matched with another fast move towards it later on, which is what I'm expecting. Now, it depends on what happens here, because USD JPY doesn't have to come back down to this area. And at the moment, the range for supply, because these highs are equal, I don't want to actually use the top range here for the Fibonacci, because these are equal highs, and most likely in the moment, the price is going to take these highs. And it may actually trigger a reversal to come back for the short, which I hope for. But nonetheless, we'll have to wait and see. So I'm not going to use the Fibonacci yet. I want to see the price take these clear equal highs right here, and then we'll know what we're doing. If there is a pullback though, I've got alarms set on my other account. I'll be ready to take some sort of long. With this one, if the entry does happen, again, you're going to have to use a lower time frame. I don't want to have a 60 pip stop loss personally. Even if the price does do the 600 pip target, that's still 1 to 10, but I could get a 20 pip stop loss if I use the M30 even, or the M15. All right, and just kind of map out the range a little bit more. And if I use this body area here, I've already got a 10 pip stop loss here, which is right here, 10 pips or 10.8. If I use the wick area, then we're looking at 20. So it doesn't have to be this 60 pip range, you know, that the market is seeming to offer from the H1. So this is where I'm looking at. And I think a 20 pip stop loss with a 600 pip target, the price so chooses to do this long, which I hope it really does. I still take it, take the risk to take the long. Now, with these highs, you can see they are equal. This is something we can call a triple equal high. We've got two equal highs next to each other, then another one nearby. When the price takes this high, because we've gapped up here, there should be a bit of time where the price will push short. And timing is everything, because it's almost 3 o'clock, which is another key time in the market, 1 hour before the UK benchmarking. So I'm hoping that the price will take this high and maybe give us initiation of a short. Now, for a Thursday, it's pretty quiet because there isn't much news going on, but that's fine anyway. Now, let's go over and see what else we've got. So these are my setups. Now, the last one is gold as a setup. And this gold setup right here, I'm still looking for a long. Now, as I told you, I'm going to probably have to switch my charts to IC markets for you to see this a bit better. Let me see if I can get this. All right. So if I do this and I pull up the chart, sorry, we've got the strategy tester open. Let me see if I can get this. Here we go. So like I was discussing here, this is the full schematic. To make it very quick, tracking the price from the moment that on the weekly here, or from the monthly, just to break the markings for a minute, and I zoom out. What we've had here with the high of 2023 is that it's taken every other high in existence on gold, giving it a very major stop hunt kind of movement here. Now, when we go to the daily and we follow the order flow since that moment here, we've had efficient price action here. This is the first supply zone. We've had a short prices return efficiently, drop short. Prices return efficiently to the second order block of supply, drop short. It's formed a third one, and price moved away from it for a while into this area, which is why I knew the price wouldn't fill this gap here, because it's left a major inefficiency here. And this would have been a great manipulation moment. And this is why I was looking for a long on gold, even though the timing was slightly off with my entry for gold. But still, that was the expectation. And the price gave us a very strong move here. It looked like it was going to go short, which is common in the market, which is why, again, until August the 1st, don't think the dollar index is long or short just yet. Wait for the price to show you its hands on the monthly. Anyway, the price gave us this movement. So far, it's given us a long. We have this supply flip zone here. Price broke above, return to the other side. We have the type 1 D1 stop on the south. We've had a move here, and now the monthly high has been taken 2 days ago. Now we've had another attempt at the high, which has taken the highs of the previous 2 days. So maybe if I go over here, you'll see what I'm talking about. So this movement right here in translation on the higher time frame has taken the high of yesterday and the day before that. So in essence, we have Wednesday and Tuesday's highs taken. Pretty cool. So with Wednesday and Tuesday's highs taken right here, what we want to do is let's do something here. So with Wednesday and Tuesday's high taken, now I do expect the price to feel this inefficiency. This is the last long I'm looking at on gold before the price goes short. And the extreme is that maybe the price may come for these highs right here and get back into the second order block at 2023. But at least we should be at 2007-8 in terms of dollar price for gold. Once that does happen, I'm looking for a strong short. This liquidity gap will be filled, and at that moment, that will be when the dollar is starting to gain strength again. Okay, which is why I still believe the dollar is going to gain strength, and the pullback that we have of the dollar index is not the final thing. Gold is definitely going to go for a short very soon, and if that happens, the dollar index is going to be very strong for that to happen, or at least come back to its strength again. It's just a matter of timing, really. So anyway, if we look at gold here, the price has taken a high here. This taking of the high should produce a pullback reaction here, where if there's buy stops above here, and the market is passed off its buy stops to the people who are buy stops here at premium pricing, then the price should start to pull away as they sell off, basically, or close their positions of buys. It should cause the price to pull back the other way. So my thing is that even though I know gold needs to go here, we do have a potential opportunity. And this is the exact same setup I gave to my students here, that this is what I'm looking for, that since the price has taken this monthly high, which is a higher time frame high, we could get a partial reversal here, which will give us an opportunity to get back into this order block one more time. And if that does happen, I'm looking for a long from this point all the way up here, which is about 520 pips. And then the entry for the buy would become the target for the sell, which is normally my style. And then from here, I'll be looking to ride the wave all the way down for some bad boy trades on the short side. Okay, so this is really what I'm trying to look for when it comes to the pairs that we have. If I go over here and then switch over to this side, this was the initial marking here. Now the price has made a new high, so I do have to adjust the Fibonacci here. This is the new swing high. All right. Now I've got the markings here. This is the low of Tuesday. Okay. And this is what I'm looking for with the price to pull back into this order block here. Especially because we had a new day move where the price just opened up and started to go long. It'll be interesting to see the market challenge that and come back down one more time. But for that to happen, we're going to need some sort of strong action in the market, some sort of news maybe. Now, this doesn't actually have to happen in the same week. Next week, the price can come back down here and do it. But this is what I am hoping and looking for with the price here. So this is my other setup when it comes to gold. I expect the price to come back down here really, and then start to kind of head off for the long from that standpoint. Okay, so for now, I'm just simply waiting to see what the price is going to do. And then from that standpoint, then I'm going to go for a long from that standpoint there. So yeah, let's see what happens here. There's quite a few opportunities kind of hanging around, but I'm not trading until I see clear movement of what the price is trying to do. Okay, now last thing is to check the news, and let's quickly check it and see. Let me just go over here. I'm going to go to FX Street and let's just have a look at the news here. And not only the news for today, but let me have a look at the news for the next week too. So if I go to FX Street, so all right. So looking at the rest of this week, there is one more high impact piece of news, but it's not US dollar related. So I don't see how it's really going to affect the pound, I mean, gold so much. Okay, and there isn't anything else here that is of any high impact importance. Okay, now if I go to next week, now this is usually the case anyway, because whenever the market dishes out a lot of pips like it did last week, there's always going to be that second week where it's a little bit more quiet. Now, next week, Monday, we have high impact news on the dollar and the pound. Tuesday, okay, we do have the bank lending survey. Wednesday, we have a pound news, and here we go. So this is it, guys. So next week, Wednesday, we have the interest rate decision for the US dollar. So this is why I'm saying to you again that we got to be prepared, because this next week, Wednesday movement should be the most highest impact news situation that we've got going on. So let's see what happens here. We also have the interest rate decision for the euro next week, Thursday too. And then on Friday, we've got the Bank of Japan's interest rate decision as well. So there is high impact news coming in next week. And then we've got the personal consumption indexes and stuff at 130. Okay, so there is a lot more high impact news. So the market and the dollar should definitely wake up next week. So hopefully either today or tomorrow should leave us with an entry, probably to continue in, even if it's the counter trend direction of the dollar's directional strength. And then by Tuesday or even on the Wednesday, we'll get the price switching over to giving us a different view, or the real strength direction. Okay. So again, this is what I'm looking for with gold, sorry, and the rest of these pairs. They're pretty quiet today, so still not going to react until they react, and probably come back even later on today or tomorrow and see what the price offers. So that's really it from me, guys. I'll see you tomorrow. Everybody have a great day. If you've got questions, leave them in the comments.